Hello guys, welcome to our weekly Forex focused. So I will be only doing the focus on only three pairs: the Australian US dollar, the Great Britain Australian, the Euro USD. So I'm using two principles to trade the market. I'm using the waves principle and also the S&D principle. So I normally do a top-down analysis. So I'm using the monthly time frame, the weekly time frame, the daily time frame, and my entries are on the 4-hour time frame zone. Sorry, 4-hour time frame. So as we can see that this market has been in an uptrend from here. Uptrend, it went up, did a correction right here, broke this supply zone, it went up. Okay, now this is an uptrend. So after that, it came down, broke this demand area, broke this demand area, also breaking this trend line as well. So by doing so, by breaking this trend line, it qualifies the act of breaking this trend line qualifies this zone to be a demand area, right? So we see that the market came down, it bounced here. I think it was 216 if I'm not mistaken. Yes, it was 216. It also bounced here the second time, 219 January. It continued to get inside the monthly time frame, the monthly demand area. Now, what does that mean? It only means that we need to be buying this market. The only thing that we need to do is buy this market. That's the only thing according to the monthly time frame. So let's go to the weekly. On the weekly time frame, the market is in a downtrend. This is the supply zone. This is a supply zone. The market went down, then correct. It went down again. It corrected, coming to this supply zone. Then, because of the supply zone, it went down to this point. On its way down, it created another supply zone. So that means it is very dangerous. It's risky to buy as yet. It's risky to buy as yet, as the monthly time frame zone tells us that we must buy, but it's risky because on the weekly time frame zone, the trend is still down, right? So let's go to the daily time frame zone. On the daily time frame zone, it is the same thing. It is very risky to buy as yet. Like we're still in a downtrend. Okay. Now let's go to the 4-hour time frame zone. And also here, we're still in a downtrend because this is a supply zone. Now, if the monthly time frame zone tells us that we should be buying, now we will only be buying if also the momentum on the lower time frame zone changes to be the same as that one of the monthly time frame zone. So the only time we will be buying, it's when we break this point. If we break this point, we come maybe here around. Let me try to annotate for you guys. Let's take this one. Let's try. We need to be maybe to break here. Yeah, we need to break here. We need this market to come up. Then, having broken this point, this supply zone, then we will expect it to come down this way. Then we will have to buy it up then. then that's gonna be, that's how we will be looking to trade this market. We are only looking to buy this market. So that's it. We will be buying this market. We'll be buying this market. So let's go to waves analysis. So as you can see, I've already prepared everything. I've already marked my charts. So as you can see, this market went up from here. It went up one, or we can say it gave us this move. It gave us this move. It gave us this impulse move, then that move. So we will only focus on this side. Let me just mark here. We'll only focus here. It gave us wave 1, wave 2. This is wave 3. This is wave 4, and wave 5. So we are now on wave 5. Remember, on supply and demand, we are on the monthly demand area. So on the demand area, the only thing you look to do is buy the market. And also, wave analysis support S&P, that when we count the waves, it's wave 1, wave 2, wave 3. This is wave 4. Let me just annotate, guys, for you. There you go. Oh, fine. We've got wave 1, wave 2, we've got wave 3, we've got wave 4, we've got wave 5. Now the question will be, is wave 5 complete? Yes, wave 5 is complete. Like when we measure wave 5 has to be an inverse, 123 inverse of wave 4. And this is here. Let me annotate for you guys. If you can see here, this is our 123.6 level. It has been reached. It has been reached. So we can conclude that looking to buy this market won't be a bad idea. It won't be a bad idea. Another thing, guys, that I have to show you is this. Okay. What's this now? Okay. I got to show you this, guys. I got to show you this. Okay, that's our 3, that's our 4 there. Where's our 5 now? Where are you, 5? That's our 5. Okay, let's put the RSI again. Okay, we can't see our 5, it's fine. But one of the rules in the wave analysis is that wave 5 has to come with momentum divergence. What does that mean? There must be divergence between 3 and 5, and also here with the moving average, with the RSI. Now, check here, guys. I want to show you something right here. Look here. Look here. Do you see what I see? Like this right here, this point is higher than this one. Wave 3 is higher than wave 5. But check here. Wave 3 on the RSI is lower than wave 5. What does that mean? This indicator is a momentum indicator. It shows the momentum of the market. It only tells us that this market, although it broke that point, it has lost momentum. It does not have momentum to go down anymore. So this supports the idea that we need to be buying this market. We need to be buying this market. This is wave 5. Wave 5 is complete. We have reached 123.6 level. We will be looking to be buying this market. So that's about it with Australian US dollar. Let's go to Great Britain Australian pound. Also here I've already marked my market. So as you can see, guys, that this market went down from here. We will be only focusing on this side, the right side of this line, this horizontal line. So it went down, it made a drop, it made a base and a drop. So you can literally call this DBD, drop, base, drop. So this is a continuation pattern according to S&D. So also here, the only thing that we're looking to do is sell this market. Why are we looking to sell this market? Because it is in a monthly supply zone. It is in a monthly supply zone. And also, if you check clearly, marking from, let me annotate for you guys. Moving from here to here, it took how many months? Let me check. Let me just remove this. It took, let's check how many months it would take. It took 5 months. From here to here, it took 5 months. Now let's count how many months it took from here to there. How many months it took from here to there? How many months it took from here to there? Sorry about that. Let's count. It took 40 clean months. Imagine. It took 5 months to drop from here to here, but it took 40 months to come from here to there. It took more time to go up here. What does that mean? It only means that this market, as much as it has been going up, but it doesn't have momentum. It is tired. It is literally tired. It has to go down. It must go down. But can we sell it now? No. Let's check the weekly time frame zone. Now on the weekly time frame zone, remember this represent the red line. This red line here, this red line, this red line, this red line here represent the monthly supply zone. Then on the monthly supply zone, we've got the weekly supply zone. Now the market, it went inside, deep inside the monthly supply zone. It can possibly come to this weekly supply zone that is inside the monthly supply zone. That's the possibility. That's the possibility. So on the weekly time frame zone, we're still in the uptrend. Let's go to the daily. And also on the daily, we're still in the uptrend. Let's go to the 4-hour. Also on the 4-hour, we're still in the uptrend. Now remember, our higher time frame zone, the monthly, tells us that we should be selling this market. It's very, very, very risky to buy at this point. It's very risky. We need to be very careful. Now, the only time we will be selling, we will have an opportunity or a go ahead on selling this market. It's when on the 4-hour we have a change of momentum. That means this momentum takes the momentum of the monthly time frame zone. We need to break this point. If we break this point, we expect this market to move from there to come here, breaking that point, come here maybe to this point, then create a supply zone maybe there. Then we will be expecting this market to come here. Then we can sell from here, then down. That's the only time we will be looking to sell this market. So that's the only time we'll be looking to sell this market. Let's use waves analysis. On waves analysis, as you can see, guys, as I said to you that this market made an impulse. This one is a correction of, okay, let me annotate for you guys. This market made from here, it made an impulse to here, right? Or let me just do it like this. Let me just do it like this. From here, it made an impulse to here. Remember, we said it took 5 months to move from here to there, but it took 40 months to move from here to there. It took 40 months. So what does that mean? It only means that this market is preparing to go down again. It made the first move, it's making the correction, it's preparing to go down again. So on wave counting, we've got 1, 2. Okay, let me annotate for you guys. We've got 1, 2, 3. That's our W right there. We've got this. This is our X right here. We've got this. This is our Y right here. We've got 1, 2, 3. This is our X right here. Then we've got 1, 2, 3. This is our Z right there. So anybody who understands wave analysis knows that if we the first this move from here 1, 2, 3, 1, 1, 2, 3 is a okay. We will be selling from here. We will be selling this market from here, but it gave us another X. It gave us the first X. It gave us the second X. So if the market gives you the second X, what will follow is Z. It's going to give you Z. Then after Z, the market has got no choice but to go down. It literally has got no choice but to go down. So this supports the fact that this market is on a monthly supply zone. Let's delete this. I will show you guys an analysis that I made here in 2008. I forecasted this move in 2018, sorry, not in 2008. In 2018, I forecasted this move. I'll show you right now. Just give me some time. Sorry about that. Sorry about that. Let's go to my Telegram channel. It's taking too much time now. There you go, there you go, there you go. Let's come in here. I will show you the analysis or where is it now? Oh my God. Yeah. Check. This is WXY. It was 2018. I forecasted this market is gonna go up. I forecasted that this market is gonna go up from here to there, giving us this Z. But of course, it didn't just go in a straight line. It made a zigzag. Then it's right here, right now. So this is to show you the accuracy of wave counting. So I'm expecting this market to go down. I'm expecting, sorry about that, okay. I'm expecting this market to go down from here now, right? I'm expecting this market to be going down, probably breaking this point, okay? But as I told you guys that the only time we will be selling it's when we have a downtrend on the lower time frame zone on the 4 hour. That means we need to break this point. Oh, sorry about that. That means we need to break this point first. Then we get a pullback. Let me show you again. We need to come down, maybe around here, I don't know. Then on our way, we need to make the supply area right here. Then we will be expecting this market to come here, then we sell. I think we are done with the Great Britain, Australian pound. Let's go to the Euro USD. Starting with the monthly time frame zone. As you guys can see that we are in the monthly demand area. So what do you do on the demand area? You buy. So that means we will only be looking to buy this market, nothing else. Nothing else. We've got to buy this market. Nothing else. So let's go to the weekly. But on the weekly, the market is still on the downtrend. Unless we break this supply zone, then on the weekly, we will be also in an uptrend. Weekly also will support the idea that we've got to buy this market. Let's go on the daily. On the daily, we're still also not really. I think now we are making our first move. Then it has left a demand area for us here. Let me annotate for you guys. It has left a demand area for us right here. That means now that this market went up, if it breaks here, we will say praise God. Then we'll be expecting it to come here. Then from here, we will be buying this market. So this one, it's like that. Let's go to wave analysis. So this market gave us 1, 2, 3, 4, 5. Our 5 is an ending diagonal. Our wave 5 is an ending diagonal. Our wave 5 is an ending diagonal. So that means we only, our wave 5 and also is complete. We will be only looking to buy this market. And okay, let me annotate for you guys. This market gave us, this is wave 3 right here, wave 3 ends here. Then it gave us this wave, and that wave. That's wave 5. That's wave 4, sorry. Sorry about that. This is wave 4 right here. So that's wave 4 right there. So from there to here, it's wave 5. So let's measure our wave 5. From here, the inverse of wave 4, check right here. It came straight to 123.6. So the target has been reached for wave 5. It supports the sorry about that. It supports the idea that we need to be buying now on this market. Now it's giving us a first move. Let me annotate for you guys. Now it's giving us our first move right here. We don't know where it's gonna start correcting. It's giving our first move. Now we will be waiting. We will only buy this market if it start correcting. Then we can be looking to buy this market. Remember, right here is our demand area. We won't just buy. We will only buy if it's coming to this point correctively. It has to correct. So that's about it, guys. Thank you for watching. Then we will do another video next week, our second video next week. Thank you very much. Have a nice week. Hopefully you will make money. Then without forgetting that, guys, on this one, patience. Now you cannot buy at this point. At this point, if you buy, you are committing a suicide. Believe me, you cannot buy at this point. You cannot buy at this point. Wait for the market to make a correction. The market does not move in a straight line. It's gonna come back down to you. Wait for it here, maybe. I don't know, but it's gonna make a correction. Sorry about that. It's gonna give us a correction. Then on the correction, we'll be looking to buy it. You cannot buy. Wait. Don't have fear. Don't have FOMO. Fear of missing out. FOMO. FOMO. Don't have this thing, fear of missing out. You will get it. You will get this market. So thank you guys very much for watching. Hopefully you will be making money this week. Thank you so much.